In today's video, we're going to take a look at NTES. Okay, we're going to start with a daily chart, and I have some reasons to start looking at some bullish strategies in this one with the risk clearly defined. Now, if you look at the larger pattern is higher highs and higher lows, and this decline actually looks a little bit similar to some of these other declines here. And in the past, when you had a decline like that, you did resume the rally. So I don't know for sure if that's what's happening this time, but I do have a couple of things that tell me that it's worth taking a look. Now, one of them is that I had some timing cycles for a possible low. I actually ran the cycles from this last high over here, and projected downwards for a possible low, and you can see that we have some standout bars on the histogram. That just essentially means that we have some Fibonacci time cycles that are coming together as we're testing a key support decision in this one, which comes in at the 269.17 to 270.11 area. Okay, so that's pretty much the setup, the time and the price coming together for support and a possible low to develop. Now, have you seen a trigger yet? Well, we have seen a trigger. On a 30-minute chart, for example, we see that we tested the support, and then we took out a prior swing high, and you also had the moving average crossover. So that was your initial buy signal against it. And if you did take a trade on it, typically you're going to risk either underneath this low that was made prior to the buy signal, or underneath the low end of the zone, which we looked at on the daily chart, which would be underneath that 269.17 area. Now, a couple of other things on this chart. One is that we're above the 200, which is a positive. But what's not positive is we're below the 50, and the 5 and 13 are still in a sell mode. So you don't have all the moving averages on the right side. So in this case, the traders that I work with are mostly doing option strategies, and one of the ones that they would typically look at is something like a credit spread, and they would be defining their risk underneath this zone. So if they put on the credit spread, they keep it and collect the premium unless we take out this support decision where we have defined our risk. Okay, so let's see if this one continues to hold up or not. I am wrong if we take out the zone.